Today in the markets, we got stocks tanking, US jobless claims coming in, did US productivity jump 10%? Home prices have spiked in Toronto, and Germany is suspending their debt limit. The gains couldn't last forever, with the S&P 500 falling over 3.5% today. This was led by losses in the tech sector, with the sectors that losing the most were the information technology, communication services, and consumer discretionary. With tech stocks fallen, it's no surprise that the Nasdaq fell almost 5% today. In Canadian markets, the S&P TSX Composite was down 1.5%. Just like their counterparts, it was led by a drop in the information technology sector. In Europe, the FTSE continued its fall, falling 1.5%, while in Asia, the Nikkei was actually up almost 1%. Oil was down, as well as gold. In the treasury markets, with all the talk about yield curves steepening, it doesn't quite seem to be happening right now, with the 10-year US yield being down almost 3 basis points on the day, ending at 62 basis points. The Canada 10-year was at 53 basis points. In the currency markets, the winners were the Japanese yen, the euro, and the US dollar. The losers were the Canadian dollar, the Australian dollar, and the British pound. Last week's US jobless claim numbers came out at 881,000. That's actually below estimates of 950,000. This is only the second week that has been under a million since the beginning of the pandemic. It's worthy to note, though, that they have changed the way they are calculating these numbers, as they are changed the way they adjust for seasonally adjusted job losses. So there might be a little discrepancy there, especially with the expected numbers. Continuing claims was 13.254 million, which is actually lower than expectations of 14 million. Not too bad of numbers, but when you consider their adjustments in changing it, it's hard to give an accurate representation comparing from previous months. Some labor numbers for the second quarter in the United States also came out, and interestingly enough, US productivity rose to record 10.1%. It's an astonishing increase in productivity, especially when you consider over the past years how that area has struggled. But on the downside, the hours worked fell 42.9%. This has contributed to a 37.1% in decline in output. So when you look at that productivity, it starts to make sense when you take into consideration that people are working less hours. Because when they're working less hours, each hour they work, potentially they are being more productive, but overall, we're still seeing a contraction. It'll be interesting to see maybe going forward whether or not it'll change the actual number of hours people work and possibly see people work less hours. I know some countries have suggested doing like a 4-day work week, but on the downside, then you have people working less hours and in turn they're going to get paid less. Labor costs also were up 9%, a decent jump, but that's not kind of expected when you consider the circumstances around the pandemic and how that increased costs. The July trade numbers have also come out, with the trade deficit rising to the highest level in 12 years to a total of $63.6 billion. That is 18.9% higher than the June deficits. This was a result of a 10.9% increase in imports, but an increase of only 8.1% in exports. This isn't really good for Donald Trump, as that has been one of his areas that he's trying to tackle, especially with the trade war with China, the new NAFTA, things like that. But at the same time, it's hard to really look at this in a consistent way going over a long term when you consider the circumstances, as we might see potentially the number going down when things start to recover. Canada's trade numbers have also come out with a deficit of 2.4 billion. This came with an increase in imports of 12.7% and an increase of exports of 11%. It's interesting to note that they actually revised the months before trade deficit numbers pretty dramatically. It says here that the June numbers deficit has gone to 1.59 billion, which is down from the previous number of 3.19 billion. Pretty dramatic drop, all things considered. Will be interesting to see how things go forward in the future when the recovery gets further along. Now, if you thought the Toronto housing market was expensive before, the increase in prices and sales that came from August will leave you wondering how hot it's going to get. As it says here, The sales increased 40.3% compared with a year ago. So that's before the pandemic numbers. And in terms of prices, they are actually up 20% from a year ago, with the average price of sale being 951,000 compared to 792,000 a year ago. It's a pretty dramatic increase in prices, all things considered. Where is this growth coming from? Detachable homes rose 50.6%, semi-detached homes climbed 66.8%, townhouses gained 45.8%, while condos were up 10.9%. Seeing a lot of that increase coming out of the detached homes as well as the semi-detached homes. Getting out of North America for a minute, this is an interesting article talking about how Germany is planning on suspending their debt limit for another year. This doesn't surprise me, as this would probably they would have to do, given that COVID's still going on, and we expect that it'll probably be an issue going into 2021. So far, it said that they have created liquidity and put out 1.3 trillion euros. Well, that sounds like a lot. Their actual gross debt to gross domestic product really isn't that high, as expected only to reach 75% this year from around 60% before. That is still a decent amount and a pretty big jump, as we expect that 75% will continue to increase next year, especially if they continue with the suspension of the debt limits. But overall, they still seem like they're in a pretty good situation, especially when you consider there has been a pretty big demand for their bonds, as they just released their green bonds and had a pretty big demand for those just yesterday. In France, the government has announced their $100 billion euro plan to try and reboot the economy over the coming years. So the French president is using this as a bet to try and help rebuild the economy before his election that comes in 2 years. It's an interesting plan to come forward. While this isn't really trying to tackle COVID directly, this is more about trying to come out of COVID and rebuild the economy. It's a large amount of money, 100 billion euros, as we will see exactly how they'll be able to fund it. As it says here that they plan to get $40 billion their funding from the European Union, which would be interesting to see how other countries respond to that don't require so much and don't have as much heavy levels of debt burden. Overall, I think that is part of the issue that can come with the European Union, especially when you have certain countries like France here. It says their debt to GDP is around 120%, as you compare, as saying earlier, with Germany, which will be around 75% at the end of the year. Let's see how that'll affect the euro going forward. It'll be interesting to see exactly how well this plan will work. A large portion of this is going to try and help reduce unemployment, as well as they plan to help with cut taxes on production to try and help, I guess, get more manufacturing and create more things in France. Now, this is some strange news that I wasn't expecting to come out. I guess Honda and General Motors have now signed on a deal to try and work with each other, especially in the North American region. I guess they plan on jointly designing vehicles. I'm not exactly sure what that will look like. Are they going to have basically a Honda slash GM car or something come out? Doesn't quite exactly say on how things are worked, but they're also going to work together in terms of parts and things like that, which makes sense to some degree to try and lower the cost, especially when people aren't exactly buying so many new vehicles right now. This isn't completely out of the realm possibility just for car makers to do, as we've seen things like this before, like the Nissan, Mitsubishi, and Renault's partnership, things like that. But it'll be just interesting to see kind of what they come out with. At first, I thought this was going to be more in the area of just electric cars, but it says here that they'll be doing with electric and combustion engine vehicles. So it'll be interesting to see what kind of products they come out with.